I'm only human. It's hard to count all of the mistakes I made. I'm only human. Don't have the power to save the day. I can't. I'm only human. Nobody's perfect. All right, good morning, good morning. Hey, I'm on time today and the system works. It is 6:30. It is April 27th. My name is Scott Redler, Chief Strategic Officer of TSLA.com. Welcome to the 6:30 Club, where we try and get prepared for what has been a pretty treacherous market. So I think this is a good song, kind of sets the tone. You know, we're all human. You make good choices, you make bad choices. You sometimes do some things, you know, that are good. Sometimes you make some mistakes, but overall you got to keep yourself happy, keep your process going, because there are times that are trickier than others. And right now it's been one of those trickier times, pretty much in the world and also in the markets. So try not to look back at mistakes you made, but you always want to correct them. So you just want to kind of look forward and make good decisions as they step in front of you. At this point, let me say hello to some of my dogs around the world. I just saw Caracas come in. It's is in the house every day. Good to see you, my friend. What up, Connecticut? What up, Sequesta? Yes, Microsoft, was sitting on 270, came out, went down to 260, and then on the conference call took back 270, and now it's up 15. We'll get to that. That's what pretty much brought the futures and everything from down after hours to now the S&P's up 40 handles, which makes it a pretty complicated open, to be honest. What up, Indiana? What up, Pixel? What up, Jack? You back in New York office? Okay, life's getting back to normal a little bit, except in China. What up, Toronto? Yeah, Microsoft is giving the market an oversold bounce. To be honest, probably not the best setup moving forward, because what this is going to do is probably put off the inevitable of lower prices and squeeze some shorts, burn off some buying, and probably is not. Yesterday's probably not going to be the low of the next few weeks, so it could have been better if we had really one of those, capitulation, crazy moves where you're able to buy in the hole and wash out versus what we have today. But you know what? We take what the market gives us and we figure it out, and we control what we can control. That's all you can do in this market. Right now, I'll put up my chart, so this way you're not reading the disclosure, so you can look at it while I take off my jacket here. What up, Palm Beach? How you doing? Yeah, yesterday was pretty crazy. As crazy as it was, it's still all we were was back to the level we were in January, the level we were in February, and the level we were in March. So the S&P down 14% off the highs, while big name stocks are at 2017 or 18 lows, and Cathy Wood names are down 70%. There's still a disconnect, though. We're still trying to figure everything out. So anyway, music's distracting. Well, this is the start of the day. I'm going to take the music off. You can pay attention. Take a look at the chart. Look at the levels. Look at the moving averages. See how you could have reacted at different points. So this way, next time when the market moves fast, you can move fast, because that's how you have to do it. You have to execute with confidence and not second guess yourself. And you can't be frustrated, and you can't revenge trade. Yeah, pretty crazy 4-day move. Risk happens fast. Alexa off. So anyway, here we are, right? If you take a look at the SPYs, you always want to look back a little bit on what transpired over the course of the past multiple weeks, so you could see. Some people are like, oh, that's hindsight. Well, if you look back in hindsight on how things transpired, next time you're in the moment, maybe you'll make better, quicker decisions, right? It feels like a year ago we had this active sequence that started in March right there that took about 2.5 weeks, and a lot of people made a lot of money during that. And then some people stayed too long. Some people didn't reduce risk. Some people didn't close out positions. Some people didn't see some of the things shift. Actually, today's Wednesday. 2 weeks ago, I remember on a Wednesday, I played something from the old school Star Wars. It was like, remember I played that little clip of a change in the force. That kind of felt when the active bears took the ball back. And that was literally right here. That was April 5th. I've talked about April 5th a bunch of times. And then last Thursday, as crazy as it was, gave you ways to get out of the way here when we opened up into resistance, failed to hold a prior high, took out a prior low. And this candlestick said, hey, the bears just really took back the ball. Here was your first signal. This was your second confirmation signal. So even if you were a little bit long, you had to think fast and get out of the way. Okay, so just to look back. And then now where did we close? You closed at 416. We were at 415.80 in March. We made a low of 410 in February. Actually, was in the Bahamas for that, and then we also were at 420 in January. So we've been at this spot multiple times. So this has been range support, and we've held it, and we've been grinding around while stocks have been for sale. So what now? Okay, the futures are up 40 handles because Microsoft came out and said double-digit growth. Which, what does double-digit growth mean? It doesn't really matter. It took back 470. They're using it as a reason to squeeze some shorts. So you're probably going to bait a little bit of money in, and it's going to be a little bit more difficult. Right here, if you look at the chart, 420 seems to be a magnet. Right now, let's see where the SPYs are. I think they're a little bit above that. Okay, so here you are. Here are your SPYs. Your SPYs are back at 420, the scene of the crime. So are you going to be buying the SPYs up 4? Probably not the best idea, but if they want to squeeze a little bit more and put max pain out there, they could probably squeeze the SPYs to 425. Hell, the 8-day, which we've gone back to, is all the way up here. So you don't want to start shorting a rally too early. Yes, all the bears are sell the rip, sell the rip, sell the rip. Okay. Sometimes if you sell the rip too early, you can't stay in the trade until finally the market tells you what level that wants to be. Same way you try and buy a dip for an oversold bounce. You got to make sure you have your prices and you're prepared. So anyway, so 420 is one level, and then 425 is above. As far as the Qs are concerned, what are you going to do? You closed on the dead lows of the year. The dead lows of the year. In my process, I'm not buying the Qs on the dead lows of the year when you have somewhat of a bearish pattern where this is leading us lower. I don't care, what it is. Doesn't mean you had to be super duper short, right? You knew Microsoft was coming out. You knew Google was coming out. You knew Texan was coming out. You knew the oscillator was minus 55. So from 347 down to 316, you didn't need to be all in short, but you also, it's hard to step in front of. Maybe you bought a little bit after hours. Maybe you traded it as you saw Microsoft reclaim some levels and Google come off lows, and you could have been doing that. But some of you guys don't even trade 5, 6 o'clock at night, which I get. And then when you look at the daily chart or you go to the weekly chart of the Qs, you're like, wow, right here on the basic neckline of what could be a weekly head and shoulders pattern, the last thing you're going to do is guess and buy and close your eyes as an active trader. Yes, if you're putting money into a tech big cap fund, you do it every single month if you're long term, if that's part of your 401k. I have that going on also. I have 3 different or 4 different long-term accounts that I'm putting in monthly money every single month. I saw a lot of people on Twitter saying to me, I say, oh my God, my balances are going to get so hit when I read them. I'm like, how old are you? Oh, I'm 42. What the hell do you give a crap? Okay, you're going to be putting monthly flows into your 60 plus. This is going to help your average cost. Don't commiserate. If you trade actively for a living, you better know what you're doing, because then you're not getting a paycheck if you're fighting this, or if you get in a big hole, it might be months. But if you're putting money in a 401k, it should be in S&P funds. It should be in big cap tech funds. It shouldn't be in individual stocks. You trade individual stocks, that's a whole different ball of wax. You better know your moving averages rules. You better use your tier system. You better have your process. You better honor stops. There are multiple things you need to do to trade stocks. As you've seen major name stocks at 5, 6 year lows annihilated. So anyway, if you're long term, you just put monthly flows in. And then whenever you see market in turmoil, when you see the smart guys on TV telling you to get out and you're already 20% off the highs, maybe put a few extra flows in. Anyway, so here is a spot. So if Microsoft underwhelmed, if Google, which is decelerating, came out, and if we were at 415, we could have been down close to these 2 spots. And these 2 spots still can happen, right? It's only April 27th. You still have 2 Fed meetings that are coming out if they raise a half of basis points. So, but after 1, 2, 3, 4 weekly candles, you don't sometimes just use the trap door there. So I don't think many people are short into yesterday, but I don't see how you could be all in long. I know for me, I'm pretty flat for that. 4 or 5 longs on. It would have been a lot easier if we were down big to buy versus a level versus, we're going to be up, and do you fade it? Do you just wait? Do you buy it? Do you have FOMO? And then all of a sudden you have Facebook tonight, and then you still have Apple and Amazon on Thursday. So we could rally today, and then,
Amazon could miss with Apple, with China and the supply chain, and all of a sudden you're back below this. It's just, this is the time where you have to have a cooler head, not chase things, but, keep your powder dry and not lose a lot and keep your brain sanity, in my humble opinion. So anyway, you go back to the daily chart of, I've been doing dailies and weeklies because the daily charts, the levels have been breaking. You've had to go to the weeklies. You've had to go to the weekly of Facebook where you had the accelerated trend break, your inside range get consolidation to the downside, and now all of a sudden you're at 179. This comes out with earnings tonight. Okay, is it going to pull a Netflix and go down to 137 and underwhelm, or is it going to be less than feared and then give you another bounce back? This is what happened to Netflix. Netflix was right around here where people thought, hey, it's down 50% off highs, we could take this long, and now look where it went to, down to 198 into this area. So just anything can happen when you're in a market environment like this. You need to know your risk, you need to know what you could do, and if sometimes you don't make the exact right decision, just let it go. I know for me, let's go back to the daily chart. Yesterday was one of those days. We had a little bit of a red dog reversal right here. On Monday, I was thinking maybe we can get a little bit of upside follow through, and then they just friggin' ran you over. I know I got stopped out around 325, and I lost money. I had a little spies and Qs on because of this reversal, thinking, hey, maybe we rally up to here, and I had to make a quick decision, get out of the way. Lost money, but it could have been a lot worse. So you have to put a little bit of positive brain power in making the right decision at the right time. And I even said yesterday to everyone on the virtual trading floor, this is what they're going to do. They're going to roll every loose long out. We're going to close into dead lows, and all of a sudden Microsoft's going to be fine. We're going to be up 40 handles, and we're going to be in the same spot where we're in no man's land, where they're going to burn off the oscillator and then bait some people in, and then probably roll us down and make lower lows whenever it is that they do that, until the market's ready to have a much better sustainable move, which probably, in my opinion, doesn't happen until somewhere after, in June even. But anyway, so here's the Qs, 322 to 325. I bet you the Qs are a little bit below that. So the Qs are right now at 320. So the Qs aren't even up to here yet. So they're right around here. This would probably be resistance where it'll be tough to get through until we get a little bit more clarity. Microsoft, this 270 was huge. After hours, it went through 270, went to 260. Then it was hovering at 270, waiting for the conference call. They came out. He was optimistic. He talked about double-digit growth, and now you're into an oversold rally. It's above 281. 288 probably, in my humble opinion, would cap the rally. Right now, I think Microsoft's at 285. I actually took some puts, and I'm going to lose money. I did it just to have it. It's a right now, Microsoft's at 285. So are you going to be buying Microsoft up 14 today? Because as an active trader, you can take it long. Maybe you took it after hours. After hours, a lot of my guys do trade after hours. They're like, okay, I'm using 270 as your red dog reversal spot. It's key. If it reclaims that, you can get an oversold bounce, but now it's at 285. If you didn't do that after hours and you don't have Microsoft, what do? Well, you have to sit back and wait to see what type of gap pivot you have, how much of today's gap hold, and it's going to be very important for sentiment. Does Microsoft open up 14 and at the end of the day is up 5? And they sold the strength and used it as a source of funds, or does it open up 14 and close up 20 and show you whether or not there's a little bit more of an appetite for risk that things could hold up? That's my thought process for Microsoft. I'm not going to trade it right away, but I'm going to watch it, because if Microsoft opens up 14 and it sells down $6 in the first 15 to 20 minutes, chances are the whole gap up is going to start to fade across the board. So that's going to be my leading indicator today. Or does it hold up? And then does Google, that's down $50, does Google go green and Microsoft go another 4 or 5 points and they can't fade Tesla? Then all right, this oversold bounce is going to go a little bit more. You can't just be in a rush to fade it, and you have to figure it out. So that's my initial thought process on what to do, because you look at Google here, Google is probably down. It's down 63 at 23.10. It was down another 100, so it's already come back. So, do they hold up Microsoft, and does Google go green? And does Tesla hold the gains, or do they sell Microsoft's open? Does Google all of a sudden start to go back down 100? And does Tesla, which has a pretty big red candle, do they sell the strength there? Because Tesla, to me, although the quarter was awesome, right here they sold the awesome quarter. That's when you're in a bearish environment. They don't, if we were in a bullish environment, they would buy an awesome quarter. If you're in a bearish, they sell it. And then you had this inside range. And I think 24 hours ago yesterday, I was like, guys, use this as a clue. I said, if Tesla doesn't hold 973 to 976, get the hell out of anything you bought on Monday, because chances are we're going to have a friggin' big down day. Some guys made a lot of money short. So that's one of I'm a little upset at myself, because I was along a little SPYs, a little Qs, a little AMD, and I had to get out of my positions, and I didn't short Tesla into a spot that I wrote about. Sometimes I hate when I write better than I trade, and I'm only human also. I have a lot going on. But I'm here to help you guys make sure the alpha team, okay, has plan A, B, and C. Make sure Redler All Access has plan A, B, and C. Make sure there's 40 charts with actionable statements. Listen, if you guys want, again, right on this link, there's 7 days for $7, and you could figure it out, check out the 450 people talking about what's happening in the market and have a big crew behind you. Sometimes people come in and it's a tricky time, like, Redler, I thought you were better than this. I'm like, well, sometimes I'm not that active if we're in a very bearish environment and you have to sit on your hands. I'm not going to always be 100% right. I'm just going to be consistent. I'm going to try and lose less if I'm wrong, and I'm going to try and make sure I play better probability setups versus just trying to give you guys action. I'm not here to give you guys action. I'm not Dave Portnoy just trying to take games, to make sure you stay, on the site. I'm here to keep you protected and keep you on the right frame of mind, so when things are conducive to your style, you can make good money and also not blow up. Anyway, so for today, Tesla is probably, I saw before, it was up what? It's up 20 points, so it's at 898. So Tesla right now is taking back a little bit of a portion. It's going to probably play with this 200-day a little bit. After a big, huge, wide range bar like that, what I would probably do is I wouldn't be buying it up 20, but if they want to push it a little bit, this 940 is kind of like 50% of this bar. If all of a sudden, you see sellers there, you shorted versus a high, and then it starts breaking below 875, probably won't be good for the early strength. They'll be fading it, or it'll be good for those of you who want to fade it. So watch this 895, 900 level, and then 943 is above. But yesterday, a lot of people made a lot of money shorting it. You're allowed to short things too, or they get the hell out of the way, or they were done with it here. There's decision spots. You have to figure out why it's a decision spot and then make the right decision when it's in front of you. For today, I'm not in Tesla. I'm thinking about fading it into this 895 area. I'm going to see if there's a signal. What's a signal? If all of a sudden SPYs are up 4, they go up 5, and Tesla doesn't move, that means there's no buyers there. Then maybe the market pulls in and then it fades. Or, Tesla's up 20, SPYs are up 4, they pull in $2, and Tesla doesn't pull in. Then there's a little bit more room for it to the upside. That's how you use relative strength, relative weakness. You have Apple coming out on Thursday. Gave you the red dog reversal sell. It closed in the dead lows through the 200-day. Are you a buyer of that because Microsoft's coming out there? No, you have to stay out of the way. And now if you look at Apple, where's Apple today? Probably it's only up 90 cents actually. It's not a it's not a very convincing up move, and that's still below this 158.47. I would think with China being pretty much closed during COVID for the last month, and maybe they won't give guidance, but the guidance is probably not going to be so good. Who's out there buying iPhones and whatever? I don't want to get into that, and it's been a crowded trade and a place to hide. So we'll see what happens there. And then you have Amazon on Thursday. I'm not going to get into it right now. It's up 40. You'll see. Why was the TLT up yesterday? Why was the 10-year down yesterday in the bond market? Well, when you have a global sell-off, okay, that usually puts a little bit of a damper on the wealth effect. That's maybe has people thinking twice about buying something, so it takes a little pressure off rates rising, right? So the more liquidity out there, the more people, I'm going to buy stuff, and the more demand there is and less things out there, prices go up, and and that could have been why it was. At this point, the TLTs are in the middle of an oversold bounce. Look how crushed it was. Actually, I'm in a TLT call spread. I make some money there. So I'm not going to claim like I'm so smart. I know. All I know is that the TLTs were very oversold. Maybe it has a little bit more room. Chances are, the yields that we saw a week ago, is that going to be the highs of the year? We'll see. Gold has been friggin' broken. We had a great trade in gold when, when the invasion of the Ukraine happened with Russia. Usually the first few times you hear things, you have the computers go, and every time there was a bomb going off in the Ukraine, gold would have a spike, and so would oil. And the more times we heard that, the less people cared about buying gold on that. And ultimately, gold gave us a great trade. Okay, remember we were in a huge call spread here in the GLDs and silver, and we made a double or triple. I haven't really revisited since. It's trying to hold. Oh, I thought you were red pub. I'm like, wait, I'm going over my distance. We're prime, So gold is holding here. Right there, you could have sold strength. Right, it was extended, not knowing this was going to happen. So now the GLD, maybe it's got to hold this 176. Otherwise, it can go lower. So the time and a place, right, for everything. When you're above the 8-21 day, whatever sector it is, whatever stock it is, usually there's momentum, there's buyers, it moves fast, there's shorts trapped, and then once the fever breaks, you better realize that because things change. I could show you like 10 different charts, the weeklies of how strong it was from 2020 up until February of last year, even with the Kathy Woods names. And then once the fever breaks and you lose the 8-21 day and shorts aren't trapped and buyers aren't in a rush to step in, the momentum in the trade changes. Look at ARK, guys. Look at the weekly chart of ARK. Okay, look at the difference from when ARK in 2020 was above the 8-21 day. The entire time, this is when Kathy Woods was a genius. The entire time, then broke the accelerated trend line, and then right here around 113, after there were a lot of smart guys who said, hey, I didn't buy it at 150. I'm going to buy it here around 120 because this is the growth, this is the future. And then all of a sudden broke 113 and it's been below ever since. So here it's above. All right, there's momentum. There's tradable patterns. Use your tier system. And right here, get the hell out of Dodge. And now, I don't know, if the S&P is going to make new lows in the year, I would think ARK is going to come into the 40s and so will some of those names. So it's just a tale of the tape. That's the way it goes. Okay, that's why my moving average book is so important because it helps you figure out what's the composure of the tape. Should you have risk on? Should you have a risk off? What's your time frame? Anyway, with that said, to me today's a tricky day because into the belly of the beast yesterday. It was hard to buy with both earnings coming out. But I'm also not short the indices, so I'll see what type of action we have today. Does the strength get sold? What's going to give me some clues on whether the strength could get sold? Whether Microsoft opens up 14 and all of a sudden pulls in 5 or 6 or it holds. Whether Tesla that was broken from yesterday opens up 20. Does it hang in or does it go red? Does Apple that's only up $1 go red early? The semis have been really weak. Or does Microsoft hold up? Does Google go green? Does things push? Do the spies go from 420? Do they want to get to 425? So, plan A, B, and C. And if you're not fast enough or quick enough, then in this type of environment, just do less and hang out and wait till you have a little bit more continuity until you see a sequence that works better for you. Conserve your brain power, conserve your friggin' trading capital, and stay in this game longer because I'd hate to see you blow up like a lot of the guys out there because there's a lot of traders that have blown up in the past year. And if you're here watching the 630 Club, congratulations, you're still in the game. And if you're down money in the last month, I'm down money this month of April. I'm down, and it's wearing. But what do? I was in my sauna today. I did 500 reps. I listened to the last Samurai 8-minute video to keep my brain positive, to keep myself going, to approach the day with a clean head, a clean slate, to make the right choices, and then wait till better setups. This is not the best setup for me today, so we'll see how it goes. And I'll try and keep the powder dry and wait. And focus on the positives because you have a lot of positives in your life. You don't define yourself by your P&L, by your day, by your week, by your month. You define yourself by your choices and the type of person that you are. And then usually it all works out. Thanks for tuning in. I appreciate you. I'll see you a little bit later in the day.